Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Kanishka Sarkar. And the next half an hour, we'll take you through how the markets rounded up the entire week and the way forward and what are going to be the cues to watch out for come next week. But first up, let's see how the market fared in this week. Now, well, today was a stellar day in the market. Of course, a big bonanza coming in from the RBI Governor Sanjay Malhotra on, as far as the rate cut is concerned, a 50 basis rate cut and a booster dose of a CRR cut of 100 basis points. That really cheered the market. In fact, Nifty 50 that was stuck in a range for the last few weeks broke above the 25,000 level. So we are comfortably above the 25,000. That's where we have ended the week with gains on the Nifty. We have managed to break the 2-week losing streak on the Nifty, and week to date, as I can see, Nifty is up 1%. As far as Nifty Bank is concerned, because that's also the biggest beneficiary of the rate cuts, the financial sector, whether it's the NBFCs, the banking space, Nifty Bank was also rallying 1.4%. In fact, for the week, Nifty Bank is up 1.4%. All the banking names were also doing pretty well today. In fact, names like IDFC First, AU Small Finance Bank, Axis, they were all trading with gains of 4%. But besides that, let's take a look at how the market has fared on a weekly basis. Like I mentioned, Nifty finally snapped its 2-week losing streak. It was led by Eternal and Shriram Finance. These were the top buzzers for the week, especially Eternal, where we did see a note come out by CLSA that gave a bullish stance on Zomato. They have it is the top pick for CLSA, and they have maintained an overweight stance on Eternal. And the back of that stock was up in a way almost 10% in this week. Coming to the broader markets, then we had the mid-cap that advanced for the second straight week. Cochin Shipyard, Prestige Estate were leading from the front. The small caps also advanced for the 4th consecutive week. It was led by Brigade Enterprise and CDSL that were leading the gains. And on the sectoral front, we had Nifty Realty. That was a top sectoral gainer for the week, advancing for the 4th consecutive week. Brigade and Sobha were the lead gainers. And no doubt, because of this big boost coming in from the RBI Governor, rate-sensitive realty sector today was also the top sectoral gainer. So that's how largely the market has rounded up. But Kanishka, take us through the other important news flows that made the headlines in this week.
That's right. In fact, not just RBI. In fact, globally also the Fed has signal a pause on rate cuts. Now, while a breakthrough in trade diplomacy saw Trump and Xi agreeing to resume tariff talks, in terms of commodity, we had silver and platinum that have hit multi-year highs, riding on safe haven demand and supply constraints. Now, back home sources have also said the government is likely to greenlight new defense corridors that's adding to the momentum in defense-linked names. Meanwhile, SEBI's approval for the 12,500 crore rupees HDB Financials IPO, that has also added fresh excitement to the primary market. On the macro front, if you look at it, May auto dispatches have remained steady, reinforcing that demand resilience that we are seeing.
So that's the top news for the week. But let's get on board Mayuresh Joshi, who's the head of Equity, and Rajesh Palvia, who's the head technical and derivative research, joining us from Axis Securities, joining us now to give us a sense of how the markets could be faring. Hi, good afternoon to both of you. Thank you so much for joining us. Rajesh, let me come to you first. A big day for the market coming in. We have finally managed to break above that range that Nifty was stuck in. We have managed to touch the 25,000 levels. From here on, do you see now the bulls really take charge? Because we've managed to surpass these levels. It's a wait and watch whether we sustain it. But what do you see on the technicals for the Nifty and Nifty Bank going ahead?
Good afternoon. So we have witnessed a consolidation of almost for a 2 week in a range of 25,000 to 24,600. So it was the consolidation range for last 2 weeks. And today we have almost reached to the highest point of this consolidation range. Looking at the data, still call writers are there at 25,000 and 25,100 strikes. So that may act as an immediate resistance for the Nifty. But looking at the broader market, the way the banking and financial have moved up, and other sector like real estate and other capital goods stocks have also participated in this rally. So I think the way broader market has recovered in last couple of weeks, I think it clearly indicates that, yes, there is a possibility that, we may break above 25,100. And once this breakout happens, I think we could see a short covering action in Nifty, and then really can extend further towards 25,400 to 500 in the coming week. So view is bullish. Buy on dips would be the strategy. 24,850 should be your stop loss to buy and accumulate in this range. For Bank Nifty, it's a clear breakout. Bank Nifty is now at a new all-time high trajectory. The way short covering has triggered post RBI policy, I think we could see another rally to extend in the coming week. 57,000 we are projecting target for Bank Nifty in the continuation of this up move. Buy on dips again here also one can apply this strategy and keep your stop loss around 56,200 to hold and accumulate Bank Nifty also.
Okay, thanks Rajesh for that view. This is Kanishka also joining in. So that 5,700 is that level that you're tracking for the Bank Nifty. But Mayuresh, now let me come to you and ask you, the market has reacted very positively to the rate cut that has been announced today. But do you see this rally sustaining going forward, driven by fundamentals, or is there a risk of profit booking going ahead?
Very good afternoon. No, I think in the first place, I think it was not expected. The street was going with the 25 bips, but the 50 bips and 100 bips CRR cut. I think that is a surprise for the market. But the RBI again concluded this by saying that they've changed the policy stance to neutral, which basically means that they will look at data points. They will see how global yields are expected to move, how the global rate cycle shapes up. And therefore, I think a large part of this move is expected to ensure that the financial system does transmission. And therefore, there is heavy lifting that probably happens in terms of advances that are clearly lagging. Obviously, I think the basic fact that comes through with all this is if you have a combined effect of the 25 and the 50 basis so far with the CRR 100 bips cut as well, I think all these efforts might actually help prop up corporate earnings by almost 250 odd bips as a base case scenario. And again, I think the expectation largely in 26 with expectations of corporate earnings expected to pick up in the second half, and a base case scenario of 10 to 12% being built in terms of earnings growth. I think that lower end of the base, with all this policy measures that have probably happened, gets lifted by almost 200, 250 odd bips. So base case scenario in terms of corporate earnings, that might actually grow, might be in that range of 12.5 to 14.5% now, which is not accounted for by most analysts on the street. And this does translate into micros actually doing well. I think the sustainability in terms of India's outperformance might actually continue. A lot of economies in the world are struggling both on macros and micros, and India might just be doing better on both these fronts. So I think valuations might come down a tad bit if corporate earnings grow at a significant pace or a decent pace at what was expected. And therefore, the markets are now not looking that expensive with these assumptions taking place. So yeah, I think remain optimistic on the markets.
Mayuresh, Rajesh, let me come to you next. The large caps have been stuck in a range. Of course, there were individual movers, but largely the large caps were in a range. It was the Smiths that were really giving an outperformance for now. Tell us on the charts, how do you see the broader end of the market, the small and the mid caps moving ahead? Because they have been clearly outperforming. Do you see further up move in that area?
Yeah, so mid-cap stocks are outperforming, and I think this is likely to be there because when your benchmark indices are, holding at a certain level, so I think mid-cap, small-cap generally, tend to move higher, and this is what exactly happening since last 2-3 week. Nifty is consolidating in range after a rally. So I think the major buying interest has been shifted to the mid cap and small cap, and we have witnessed most of the mid cap small cap space have done well, and the kind of rally which we have unfolded in last 2-3 week, I think there could be another rally of 3 to 4% in this space in the coming weeks. So I think yes, one should remain invested in this mid cap and small cap space, and I think quality mid cap small cap can do well. And the way a breakout has happened on the near-term, short-term chart, that clearly shows that yes, buying interest is there very much there in the mid-cap, small-cap space, and we could see good traction going forward also. So I think on an index level, 24,800 one needs to keep as a stop loss. And I think these levels, if these levels are intact for some more time, so we could see another 2 to 3% kind of up move in mid cap small cap space.
Okay. Thanks, Mayuresh, for that view. Rajesh, for that view. Sorry, my bad. Mayuresh, now coming to you, the RBI has, lowered its inflation forecast to 3.7% for FY26. But I want to understand, is there any change in how one must look at the consumer discretionary companies and those reliant on the stable raw material prices given this inflation forecast?
Well, I think it's a huge positive, right? Because I think if you probably have a construct that input cost inflation is something that was hurting a lot of commodity-driven companies to a large extent. And therefore, I think with the expectations of input cost inflation actually going lower across baskets, whether it's food inflation or otherwise, or imported inflation to a certain extent as well, crude prices are significantly lower as we speak. That would drive margin expansion to a large extent. What would also drive is the inherent demand coming back based on two cyclical factors. One, obviously, with the tax cuts that have got announced, the expectations in terms of discretionary spending is expected to go significantly higher this fiscal. And better monsoons expected this time around will mean that rural consumption, which had been lagging and which has shown signs of coming back, might come back very, very strongly. In terms of MSP increases, in terms of farm produce, farm gate prices being significantly higher, and initiatives that the government, both central and state, are taking in terms of food stroke cash crops as well. And therefore, I think a large part of the consumption basket, and I would include all three aspects of this, including consumption discretionary, including consumer staples, and consumer durable as well. Urban consumption should start coming back steadily as we speak. Rural should see a significant amount of comeback as well as we head into the second half. And therefore, I think inflationary trajectory does play a huge part in terms of consumption trend. And the key drivers that might actually have a multiplier effect, as most banks are probably putting forth, in terms of advances growth, in terms of better demand coming through, and in terms of better savings happening across households. I think a lot more can be expected in terms of volume-led pricing growth coming back, creating operating leverage in all three segments of consumer discretionary staples as well as durables.
Mayuresh, let me come to you now. Given the rate cut, of course, the biggest beneficiaries of that are the banks, the NBFCs, and the rate-sensitive real estate sector. But besides that, what's the pockets of value that you see in the market? What are the sectors that you see, leading from the front now that the rate cut is out, and it's a big upside surprise that we have got. So, by virtue of that, we do have certain micros that are auguring very well for Indian markets, whether it is the cooling off of inflation, the rate cut, or the food prices also easing off. A lot of tailwinds there. What are the sectors that you see, moving ahead in the next leg of the rally?
Banks have done exceptionally well, and my own sense is that this provides additional ammunition in terms of earnings stability and earnings growth that this sector can probably exhibit. And therefore, I think banks, select leadership NBFCs, in our opinion, can continue doing well. And let's not forget PSU banks as well, where there is an additional cushion and comfort in terms of risk reward as far as valuations are concerned as well. And therefore, I think this pocket of the market has to do the heavy lifting as far as the growth dynamics are concerned for the economy as a whole. And they would continue doing that. Obviously, being selective is the mantra here, because we don't want to probably get into any particular or specific stocks which have lower capital adequacies or where credit underwriting is not up to the mark. So I think select leadership stocks within this space should continue doing well. The second aspect that I just mentioned was consumers and consumer discretionary stroke, staple stock, durable selectively should start making a comeback as we head into Q2. Q1 might still be a transition quarter, in my opinion, in terms of how demand dynamics are playing out. Q2 might be a base building quarter, but I think the second half is where I think numbers should start coming back quite significantly. So I think select FMCG stock, select footwear stocks, select apparel stocks should continue or should start performing well as far as numbers are concerned. A couple of pockets where I think the earning stability and growth should continue, where a large part of our portfolios are probably skewed at this juncture, both locally and globally as well, would be select agrochemical stocks, specialty chemical names, which have shown strong earning stability as we speak. And within healthcare, I think hospital stocks have exhibited a very, very strong show as far as numbers are concerned. So my own sense is that these broad-based sectors, in my opinion, is where earning stability and earning strength should continue.
All right, then Rajesh, now coming to you, since we were talking about sectors, I want to understand your view on the realty sector. Now, realty index, even hit a 5-month high, intraday high this week, and the RBI move today has only taken it higher. So, what are the next levels that we should be watching out for this one?
Definitely. So very strong move, especially in Nifty Realty today. Almost 4.5% gain for Nifty Realty Index during the day. And the way the most of the real estate stocks have moved up in last couple of weeks, I think the kind of breakout which we are witnessing, the stock like DLF, Oberoi Realty, Prestige State, Lodha, all stocks have managed to give breakout on their short to medium term charts. And the way Nifty Realty is holding, I think we may see the continuity of uptrend. So we like stock from this space, like DLF is looking very attractive. We are projecting target towards 930, 940 for trading point of view with stop loss of 845. Another stock that we like is Prestige State, a very strong momentum in last couple of days. I think here also we could see a target towards 1760 to 1780 with stop loss of 1660. So I think this stock, this sector is likely to perform well, and I think we may see furthermore continuity of uptrend in a real estate space.
All right, so that's the view coming in as far as the real estate space is concerned. But Mayurish, let me come to you and ask you about the consumption basket. Now, consumption basket has been an underperformer. Now, with the inflation cooling off, especially if the food prices, and now with the rate cuts, and therefore more money in the hands of the people for for spending. For more money for discretionary spends, how do you see the consumption basket moving? And within the consumption basket, what are the pockets, whether it's the staples, the discretionaries, and within discretionaries, what would you be betting on?
So as I said, I think all three pockets selectively might do well because both urban and rural was lagging, and both these pockets are expected to make a strong comeback as we head into the second half. So within FMCG, Marico is something that we continue holding both in our local as well as global portfolios. Our sense is that the kind of numbers that Marico has exhibited so far, volume should be steady state going forward. Pricing should start coming back, and where a large part of the FMCG basket was getting affected was the inability to pass through prices. Input cost inflation was higher. They had to resort to different measures in terms of reducing damage or introducing different SKUs, but a complete pass-through was not happening. I think that might largely be behind in the next few quarters as demand comes back, and demand-led pricing probably ensures operating leverage onto the balance sheets. At this juncture, Marico probably remains our top pick. I mentioned footwear players. And again, I think if you look at the bottom-up approach, that probably happens. These are one stocks when consumption starts coming out of the slump. FMCG, selectively, footwear and apparel makers are the first three pockets that show significant signs of strength and improvement. And therefore, I think a stock like a Campus Activewear as an example, Bata is largely underperformed. Input cost inflation going down, expectations of demand coming back, expectations of margins inching higher will create those EPS numbers that we're probably looking at, which might be significantly better over the next 2 years. So I think stocks like Campus, Bata is something that we're keeping on our radar. The third is obviously apparel makers, and apparel makers which are priced at less than 1,000 odd rupees, which are present in tier 1, tier 2 cities, tier 3 cities as well. I think that is where the core growth will come from as growth returns quite significantly, specifically in rural and semi-urban or semi-urban areas. And therefore, a stock like a V-Mart Retail as an example, or Vishal Mega Mart is an example, where the pricing is appropriate, where the expectations in terms of sales store growth should actually improve quite significantly and exponentially over the next few quarters based on these assumptions that we're probably carrying, might actually reflect in better numbers and earnings visibility over the next few quarters. So these three pockets will continue doing well. Consumer durables have done well. And as urban starts coming back, your select leadership stocks, whether they are AC makers, whether they are select consumer durables who are doing kitchen appliances, as an example, might actually start coming back as well.
Okay, thank you, Mayuresh, for that view. Those are the pockets where you see value within that consumption basket. But Rajesh, now coming to you, given the kind of market setup we have right now, to help us understand which are your top picks at this point.
Two stocks idea, both are on the buy side. The first one is from the real estate space, that is Oberoi Realty. The way stock is now, managed to give breakout of the almost 8 to 10 week consolidation range. And now stock is, forming a rounding bottom sort of formation on a daily chart. Long built up was there in the derivative data. So looking at the overall setup for Oberoi Realty, we believe that, this stock may extend its gain. Possible target towards 1950 to 1960 in the coming week. One can keep stop loss towards 1888 to buy Oberoi Realty. The second stock, that is from the healthcare space, Fortis Healthcare is looking very attractive. Stock is almost trading near to its all-time high trajectory. The way stock is moving in upsloping channel on a weekly chart, that clearly indicates that there is a sustained buying action is happening in this counter. Looking at the breakout on daily chart, we believe that Fortis can extend its gain in the coming week. Possible target towards 795. So one can buy this stock with stop loss of 748.
Mayuresh and Rajesh, thank you so much for taking the time out and joining us and weighing in the markets. We will let you go on that note. But with that, it's curtains down this edition of Your Trades. Kanishka and I will take your leave. Thank you so much for tuning in.